Property Investing Insights, your authority on all things property investing, finance and wealth creation with Right Property Group.
Hello and welcome to Property Investing Insights, Client Stories. Today I've got a very interesting guest, Claire Astle, and she's a mortgage broker. We're actually using technology today, and I'm way out of my comfort zone because, as you would know, technology and I don't go well together. However, for you, I have taken the uncomfortable road. How's that? So Claire is actually based in Melbourne. And the story background here is that she was helping a lot of our clients invest in property. So she was actually setting up the mortgages as I took them through the journey. And she saw the journey. And then in 2020, she jumped on board as a client. And I would like to share her story with you. So down from Melbourne, tell us a bit about yourself.
Okay, so I have been in the finance industry for over 20 years now. So mortgage broking for a big portion of that. I've also been investing for maybe 20 years.
You had to pause there because it's been so long that you've been investing, right? It shows that you've been investing for quite a while to be able to leverage of that into mortgage broking and whatnot.
Yes, absolutely. I've always just thought property is something very tangible and something that I can relate to. I really see it as a vehicle to wealth and have been so keen to be able to leverage lending to, lean into that growth of wealth.
Yeah. And you mentioned that you've been investing for 20 years. How did that journey start? And I know that we got in touch in 2020, but prior to that, you were also doing a bit of my mortgages, my personal mortgages as well. And you still have got the battle scars of that. So do tell us about how you got started and what the journey was like before you started using RPG services.
Yeah, it was probably very ad hoc. Maybe not with a very uh, concentrated idea of what I was trying to achieve. I did buy in a relatively local area to where we were living. Um, Probably wasn't that bad, but did sell. So in hindsight, I think we didn't hold long enough. It was more a case of getting the irrits with a tenant that didn't behave as you wanted them to and feeling like you're not quite getting somewhere where you hope to, not realizing at the time that I really should have been looking at much longer picture. Have ventured into, a unit purchase that was like very, very cheap. Good, that like almost cash purchase type thing, because it was just going to be a yield property. But the very, very, very cheap isn't necessarily a great option either, because you can have issues with who you're attracting into those properties.
Of course, cheap is usually nasty in most cases, isn't it?
It is. Yeah. It is. It wasn't too bad. Came out of it unscathed, but probably not progressed.
So when you say that you hadn't progressed, was it due to lack of increase in price, or what was the issue there?
Yeah, it was more a case of that the property didn't really grow in value. It probably was never going to if I look at the parameters. It a bit more of an experienced mindset of what is an attractive property for an investor in terms of really having to find ideas of what it is that I'm trying to achieve. I don't really these days look at something as being just a yield. It's got to have, a certain parameters to achieve growth as well.
Yeah. So you get the best of both worlds. Obviously, you can't just go down the path of maybe just the one, or whether it's just directly only capital growth, because most of the time capital growth comes with a bit of negative cash flow. And then it can't also go down the yield play either, because just like your unit, it could probably not grow as well in comparison to say perhaps a slightly more negative, slightly more balanced purchase.
Yeah.
You mentioned offline that you had to restart. How did that pan and what happened?
Yeah, it was a marriage breakdown, so liquidation of assets to make that split happen. So 2020, when I came to you, was the first restart back into investing at that point. And I was much more aware of what it was that I'm trying to achieve. I still have to this day, actually, a piece of page of a notepad that was setting out a whole set of goals. And I'm a numbers girl. Whole lot of numbers as to what I wanted to achieve, what that time frame was going to need to be. And, to get that started was a purchase in Brisbane. And it was a property that needed to have the potential to grow organically, but also through add value.
And where were you in terms of career at that time? In what I'm trying to get over here is, was there stability of income? What were we aiming for in that particular property? And the other aspect of the question is, you've then invested in a different state pretty much straight away. So that would have been a double leap.
Yes, it was. Yeah, that was my first venture out into investing as a single. And I guess I wanted the confidence that comes with someone else going along the journey with you. I believe that I didn't need to be confined by my local geography. It was really open to being told this works for these reasons. And hence why, I knew that I'm not going to traipse all around the countryside looking for property. I needed a likes of a buyer's agent and Shows Right Property Group, because I had met you through working on your portfolio with mortgages, and had that confidence that you, I had the insight that most clients don't of what you've achieved.
Yeah.
And that gave me a hell of a lot of faith that you are looking after your clients in the same way that you would be, trying to achieve for yourself.
Absolutely. And the properties were very similar, right? It was not like I was advising you on something that I wasn't even buying myself. And that's really important, right? Because then what it does, it allows your advisor to have actually walked in your shoes in those areas, so that the advice and the recommendations are actually pertinent to that local area, as opposed to following the data only and following a strategy that you haven't even implemented yourself.
Yeah, that's right. But I can still say it was a little bit scary just buying off the back of seeing a video.
You know that property doesn't exist, right?
However, we had a strategy which was great. I like working with strategies. I do that for my clients. I'm like, what are we trying to achieve over the long term? This is not just a single transaction. So in my case, with this first venture back into property as an investor, it was an intent to buy something that had the ability to add value, as I said. So the ability to add a Grade E flat needed to have certain land size. It needed to be within a couple of certain council areas, because no areas were allowing that.
Yeah.
And we achieved that purchase, and within 9 months had a Grade E flat built. to the guidance of, the recommendations that Ryan Property Group gave me to, who to work with to get that done.
One of the risks of building a granny flat with that close to settlement is that the bank may see it as a risk in saying that, okay, you don't have enough equity, so it means that you're chipping in a bit more of your capital because there may be a shortfall in the package valuation, the house plus then the construction cost of the granny flat. Did you encounter that, or was it smooth sailing for you?
I know what they're going to need, so it was yeah. But I had equity available in my best principal place of residence, so I was essentially 100% financed for the purchase and the granny flat, which meant that I could technically gear as much as possible and minimize tax, and I guess use a number of those methods to achieve a future to get to where I was trying to get to initial.
So you've used your mortgage broking qualifications and insight in terms of how finance works to be able to map out the plan of how to materialize the strategy we put together in terms of buying a home and then putting a secondary dwelling on it to then reduce the negative cash flow. And then your knowledge of how depreciation works on a new dwelling and all that help tie everything together. And did you use a good mortgage broker?
Yeah, I did. Very much. Yeah. But I think it's important then when you're looking at a strategy like that where you know that there's going to be an immediate need for future borrowing, that's factored into your borrowing capacity. I didn't have an increase in wage to be able to get the granny flat. So that all had to be known at the outset when choosing the property and going in at a certain price point in the first place.
Absolutely. So you knew what your maximum borrowing capacity would be. You've already pre-calculated what the likely cost is to build a granny flat and the rental, to then approach the correct lender that'll support you through the journey as opposed to going for the cheapest interest rate.
That's right, yes. And, I knew I needed to do a construction. Not all lenders will do construction. So a number of different parameters that she steered me towards, who I did use. And that made it a very smooth process. No swapping and changing, no discharge, no multiple applications. It was very, very straightforward.
Yeah. So as a mortgage broker that deals with investors and homeowners alike, particularly down the investment path, what are a few things in this scenario? What are a few red flags or pitfalls that you need to watch out for as you're going down this finance journey?
I guess property selection is certainly one where you were very clear that I think, if I remember rightly, there was 3 council areas that were allowing this type of build. But on the lending side, red flags, who the borrower is, whether they'll do construction, whether they will factor in future rent. And then I also had to manage the existing tenant and where they fit into it and how comfortable they were going to be with the
build for the granny flat.
Yeah. And I was exceedingly fortunate that the tenant, when I bought, remained, so I had no gap in rent when I after settlement. And as it turned out, a family member in Hatters has tenanted the granny flat when that was complete. It's been very simple, although I was quite prepared that might not be the case. I understand, the difficulties of land that has been someone's available to use is no longer, and then they're actually also having to endure a construction phase.
Yeah. How long did that construction take, considering that 2020 was the start of the crunch in terms of constructions?
It was actually really smooth. It was pretty much bang on 6 months, may have got to 6.5. The contract was expected to be 6, I believe. So it was really on target. I think they were very organized. I was probably on them, onto them as well to just figure out and, whatever needs to be done, give me the choices, I'll make them. But I'm not going to dig in the property. I can make some design choices
Yes.
really easily.
Yeah, yeah. And in terms of time frames, you bought the property, you settled on it, and then within 9 months you had a granny flat on there. Yeah. So, sounds like, it was a planned pregnancy in there in terms of getting another income, right? Yeah. And so what was the next step after that? So you had a house which was rented, then you had a new credit flat that was also rented, which also brought in with the positive cash flow, the depreciation as well. So what was the next step for you?
So my plan on my little notepad was basically to be trying to achieve a new purchase every 2 years. And the granny flat was probably, somewhere within that 2 years. Or whether I actually wanted that to be like part of the purchase or what that was. But in any case, it was achieved that I had 2 streams of income in the 2-year time frame. And then I began thinking about what I can do to get another purchase. So it was it that we
I think it was towards the tail end of 2021 from them. Yeah.
Was it really?
Yeah. Yeah.
Okay. So that was a little bit sooner than I'd obviously envisaged. So that's pretty awesome. And you introduced me to a property that was in dire condition.
That's being very diplomatic.
I can remember when we fronted up to go get the keys and they said, "Do you have a mask?" And we were like COVID? No. Well, we mentioned the property and it smelled.
Mm-hmm.
And it wasn't left in the greatest condition, with the previous owners leaving quite a lot of rubbish and mess. And although they had, in their way, tried to clean up as much as possible, there was a lot of cleanup required.
Yeah, yeah. And so to put it in perspective, we are in New South Wales there. Yeah.
It was in New South Wales. We were in
Yeah, yeah. So how did you manage the renovations? Because this was a cleanup and a renovation, and this was something that the intent for this property from memory was to build up the equity really fast to give you leverage into what you're going to do next.
Yes, that's right. So the property was bought at lower than market value, basically because of the condition of the property, and it was an off-market purchase. We arrived knowing that we would need to be doing some cosmetic repairs. Day one, we actually ripped out the kitchen. That wasn't in the plan. But it was so dirty that it was like a case of where do you start? And we had, I think, 3 days that we were going to be up there to just take stock. And then across the period of 2.5 months, I think we drove up to Sydney 5 times.
Mm-hmm.
Each stay was somewhere between 3 and 5 days.
Mm-hmm. So where were you staying when you're up in Sydney?
We had a van with the mattress in the back. The majority.
Yeah.
Or that first night or that first visit, we did not stay. We went straight to get hands off flea control bombs to set off the mouse, and didn't stay for that particular weekend. But everyone after that we did. Eventually we were able to move into and, put the mattress on the carpet in the house and that. We were doing it rough.
Mm-hmm. Mm-hmm. Yeah. And so what all did you do to the first of all, obviously you cleaned it up in getting rid of all the junk in there.
Yes. We were presented with a smattering of different paint colours through the house and a very liberal amount of holes in the walls. More or less every wall needed to be patched and cleaned and painted. The painter that we got involved was amazing. We didn't do that part of it. We had a tradesperson do that. We did rip out the kitchen and installed new.
Mm-hmm. Did you install or did a tradesperson come in and install? Okay. Yeah.
We did retail, we did refloor the entire property in floating floor as well as carpet. Also, I did the carpet. We did the flooring. We replaced window coverings. We replaced 80% of the windows had as well. We painted the exterior. We had to do a fair bit of sewing and garden work to uncover where the garden actually was. Gosh, what else did we do? A new laundry. We did a bathroom addition. We created a separate toilet. And redid the shower.
Yeah.
To an extended area.
So whilst you're doing this renovation, I will come back to the high level numbers on this in a sec, right? Whilst you're doing this renovation, what was happening career wise? Were you still working? Was it time off? What was happening?
Still working. So it was just annual leave taken, and weekends as we would drive up on a Friday night or over a Thursday night and take a Friday. Arrive so that we could basically sleep. So we, be fresh to start the next morning. We would do somewhere between 12 and 15 hours work the day, and then drive back and go back to work.
So doing it rough, doing it from remote, traveling from remote to get here. So it was 10-hour travels. How long from start to finish was this renovation?
2.5 months.
2.5 months. Okay.
Yeah. We did have an amazing neighbour, Ted Beatrivi, who was not actually working at the time. So we gave him keys and some instructions in between. We think that we're going to take, a couple of goes to, if it was like a couple of coats of something, or something like that neat. So he a few bits and pieces, which was amazing help because I couldn't be there every day, but some things needed a period to dry or, things like the
waterproof.
Shower and things like that, to have him to come in and do the wood breaking, and then we could arrive a couple of days later and start doing the tiling.
Yeah, so you became resourceful to be able to cut corners in terms of time frame to do that. So what did it end up costing you? So it feels like you pretty much rebuilt the home from the inside out, right?
Yes, I would say that there was every surface that we touched in some way to make an improvement to it. All up, it cost us about 52,000.
Okay. Plus a lot of lost sleep and hard work. Yeah. So
It was invigorating, though. It was so good. The photos of, from here to here
yeah.
are like, you just kind of look back at it and think, I did that. It's kind of unfathomable. But in the middle of it, you're just like, well, I'm only here for 3 days, so can't think about it. Just get on with it.
Yeah, yeah. I remember popping in when the house was almost finished, and that was the first time we had physically met as well. Despite you having done my mortgages, and despite you having used my services for 2 purchases, and that was the first time we'd actually physically met.
Yes.
Yeah, and you had, if I can paint a picture, you had streaks of paint in your hair, and dressed in your Sunday best, of course, for renovation. Yeah. And so what was the outcome of that property? What happened to that property?
So we tenanted it after we had completed the renovation. And that was very good. Had tenants in there for just over 12 months. Oh, actually, it might have been almost 2 years. And we made a decision to sell that property. It had grown in value in addition to the value add that had achieved quite a good increase in value. But the reason to sell was not a planned reason in that whole portfolio build. It was a desire to go out and be self-employed as a mortgage broker and to give that space to build a business and have not the impact of large commitments.
Yeah, yeah. So you flag something that's really important, which people tend not to give it as much thought as you have, right? That property is a vehicle. It's a vehicle to get you to your goal, and sometimes it does need to be sold down to facilitate that goal, right? So your goal was obviously to be able to build a portfolio in the background, but also to go out on your own in terms of self-employment, which also took you out of the game for a little while as well, didn't it?
Yeah, look, it's one of those things that goals change over time as well. You need to be able to readjust and think broader, or you've learned more of planning to see what you can do and what you're capable of. So I got to that point where I had the conviction that I can, build a business as a mortgage broking for myself. Obviously, I had vast experience, but running a business isn't just being a broker.
Yes, yes. You have to wear many hats. Yeah.
Yes.
Including solving technology like we did today, right? To get this recorded. So once you've transitioned into self-employment, you obviously went down the route of self-managed super fund, and you bought a property there.
Yes, we bought a commercial property. So that was a first for me to go into commercial investing in my own portfolio. And again, quite an interesting path that we were trying to solve for specific needs of what that property must be. We were very fortunate that I knew exactly what was going to be needed along that path. I knew that I coordinated it, but do things necessarily in the right order. I did actually find the property and then set up the SMSF. So make people do things really quickly.
Yeah. So it's like do as I say, not do as I do, right?
A little light patch, yes, I know.
Yeah. So speaking of setting up SMSFs and entities, you as a mortgage broker would be seeing a lot of trends right now in terms of investors being advised to set up self-managed funds, to investors advised to set up trusts. What is your feedback based on your experience, both as an investor and as a mortgage broker, in terms of both of that?
Yeah, look, it's a very dynamic time in that space at the moment. With a number of lenders that are pulling back on lending to trusts or entities to deliver only to existing customers, or some lenders have actually pulled out of that space. And that's in response to a lot of investment advice that seems to be quite public about suggesting that borrowing in an entity is going to improve borrowing capacity. There is that potential, but it's not necessarily uniquely the same for everyone. It should be approached with caution.
Yeah.
So Mazzette's space is obviously slightly different in that it is still a trust and company as borrower or bare trust. But there's been probably an increase in lender appetite for that. I would probably say that that's very much a growing area where we're being a little bit more comfortable that this is a space that's here to stay.
Yeah, absolutely. And it's really important at this stage to flag that if you going down the path of borrowing in a trust because of perpetual borrowing capacity, look at both sides of the coin in terms of what the negative cash flow is for that. Don't just take the loan into account, take into account the stamp duties and the deposits that you need to put in. If you're putting in cash deposits, then yes, it could be positive. But if you're taking full exposure, check where the money is coming from and take that into account, because that could lead you into trouble.
Yeah, there's a lot of considerations and a lot of advisors that need to be in on those sorts of decisions. As a mortgage broker, I'm not making those decisions for someone about what entity or borrower choice that they make. They need to get that advice and a really good team around them. So I always encourage that, you don't unilaterally make a decision based on something that you saw on YouTube.
No, absolutely. So I've got two questions for you, or two-phased question for you. If you met an investor that was just starting out, what's an advice that you could give them?
Think about this not as a transaction, it's the start of your portfolio, and do it now.
Yeah, good advice. And the second phase to that question is, if the investor was someone that had a portfolio or had already started a portfolio, what advice would you give them?
Refresh and revise your portfolio regularly enough to ensure that you are maintaining both borrowing capacity and availability of deposits.
Fantastic. I'd really like that, because what most people don't do is cater for money. That they don't get the money before the need is right. They usually start to scramble to get the money when the need is absolutely dire. And then you don't have the best choice of structure. You don't have the best choice of lenders because you're running against time.
Yeah, that's right. And, look, it's never a good thing to have a property that you absolutely want to buy and then start asking, how am I going to do it?
How much can I borrow? That's all right. So, yeah. And as a mortgage broker, when you're looking for lending solutions for a client, what are you focusing most on? Is it the interest rate, or is it the dollar amount that they can borrow?
It's about understanding their whole future goals. At times, I would be suggesting a lender that might not necessarily be the cheapest, but because they have a policy that is favorable to that person's circumstance, whether it be their income or whether it's a combination purpose that enables them to access a different product. It could be that they have a strong asset position, and after this purchase they're going to need to be utilizing something like an offset facility, that they don't just go for the cheapest loan, which might be a basic. There's a lot of things to consider in terms of choice of lender as well as choice of product. And I always tell people there's a range of solutions, and I'll tell you what is good about this one and why I recommend it, but I'll also tell you why these others are here for your consideration, and to make sure that we've understood each other as to what the priority is within their goals.
Yeah, fantastic. And just like when it began, we talked about, cheap not necessarily being the way to go. It's the same with mortgages. Cheap might not be the way to go. It's what you want out of that mortgage, and how that becomes the vehicle to purchase the vehicle to get you to your investment goals.
Yeah, absolutely. Yes.
Yeah.
I don't think with just a number as being the cheapest that you could possibly get is not always the best answer.
Absolutely. Now, Claire, before we finish, is there anything else you'd like to share with our listeners in terms of your years of investing experience and mortgage broking experience?
I would always say to everyone that I meet, whether it's a first-home buyer or an investor or someone who is interested in property, get out there, learn as much as you can, but take on advisors that you trust, and look to build something that is a portfolio. Think big, and I guess that's why my company is called Acorn Mortgages.
Yes.
Acorn is the seed. That's the idea, the inspiration that's going to grow into this huge, majestic tree, and that's what I think of as property as my way to wealth.
Fantastic. And that's very well put, and a very apt name as well, Acorn Mortgages. Claire, thank you very much for sharing your story with the listeners. It's been an absolute pleasure and privilege, and also been an absolute privilege helping you in this journey. And I hope the listeners have got a whole lot of new sets of questions based on what we have talked about.
Absolutely. No, it's been a delight. Thank you.
That's Claire Astle and her journey, a mortgage broker and an investor. I hope you found that inspiring. Until next month, goodbye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.